Morning. Let's go. Reload the coffee and we'll get on with it. Yeah, not very exciting music, huh? Sorry. I forgot my coffee. Forgot my coffee. Where did I even put it? Where did it go? Let's put some more exciting music on, huh? All right. That'll do, pig. That'll do. I got to get to the chat now. We'll kill the music. We'll get to the chat. All right, guten Morgen. Comment allez-vous? How are you? It's another good day to be alive. The sun is shining. There's blue skies. No wind. It's probably cold though. Yeah, probably cold. All right, so welcome to Forex.Today, the YouTube community that makes the Forex experience tolerable, maybe even fun and informative at the same time. Fun and informative. Hey, I'll tell you what though, my name is Wayne and I'm a humble servant. I'm here to serve. So what do you want to do? As they say in Atlanta, what do you have? Technical analysis, fundamental analysis, trader psychology, funny stories from life, how to raise money, how to manage money. Yeah, lots of amazing things going on. Lots of amazing things going on. It's weird. I have to keep sitting down and writing down all the amazing things that are happening to keep up with them. Just cool. So anywho, Trader's Way is a broker that doesn't trade against you. Enough said. Made us as a recession? Maybe. I don't see it yet. So my Council of Investment Advisors, my CIA, we have a top secret model used by very few. And it predicts recessions months before the official indicators do. So right now, based on our model, we're not that worried. But we do watch it. We do track. Yeah. Yeah. Yeah, no, it's actually quite important. Like it's a very important thing, obviously, right? And so we must have a way so that we make the investment decisions rationally. And we looked in December, we looked again in January, and then we've looked again in February, and we invested the money in the pension fund as if recession was not in the cards, and obviously our portfolio has benefited from the rally in November, December, January, February even. So we got it right. Now, if the market had gone down, I still think we would have gotten it right in the sense that we were still making long-term investments based on the economic data, right? And we would have known that a drop in, let's say, in the S&P 500 in January, February, was a dip and not a crash. And we wouldn't be trading with fear. That's why you have models, right, to try to give you clarification. And so that model is quite clear that we're okay right now. But things can change, and they do change. They will change, and we will be on top of it. Okay? So it's kind of cool. Yeah, this kind of the kind of stuff that we're doing. Swing by Trader's Way. Open up a demo account. I just downloaded new MT4 behind me, which was good. Does anybody use CTrader? I don't use CTrader. I downloaded it quite some time ago, and it looked really cool. It looked really nice, but I don't know anything about it. Mr. Wright does? Yeah. It looked really cool. Yeah. I I think I still have the quick deal. Let's see if I have a quick deal here. Oops, wrong one. This one. Quick deal. Haven't used that in a long time. There it is. You see the quick deal? This is a Trader's Way tool. It's not just MT4. Oh, I can't zoom in. It's not just MT4. This is a Trader's Way tool, and it shows you the volume. There's a little, you can buy and sell by just clicking buttons. You can adjust your stops, right? So you're like, give me 100 pip stop, give me 150 pip limit. You see how easy that is? And then you can buy or sell, and you can trade off the ladder if that's how you want to trade. That's not something I do, but that's sort of a unique tool for Trader's Way. And then, of course, if you're day trading and you throw down and you know, or in particular scalping, let's say, scalping and day trading, if you had like 10 or 15 trades open and then you're running into a daily, like a monthly pivot or something, you can just close all, and it closes all your open positions, all in just one click, boom. So it'll show you your floating profit and loss for all your trades, and you can close all your trades with one click versus going through and manually clicking them. So that's all, with Trader's Way. And again, it's spread on the website, like, right? You can get that. But for the where did I see it? Quick deal. For that though, you have to have Trader's Way. Yeah. Sorry, man. I had a tough morning. I rolled out of bed late. I'm wearing clothes I picked up off the floor. Oh my God. I'm a disaster today. So that's cool. So Trader's Way. So get this. This is happening. Traders.co is happening. Watch this. I updated the colors. Which one do you like better, red or green? I did some calculations. 125 assets. Looking for 12 patterns on 5 different time frames, from scalping all the way to position trading. So Traders is watching 7,500 charts in real time. But it remembers all the charts from the past. So it'll say, oh my God, Euro Pound on the 1 hour chart has a rising wedge. And we've seen on the Euro Pound hourly chart 27 other times before rising wedges. And 72% of the time it goes up here to this level. And it draws everything. So it's not just that it's watching 7,500 charts, but it remembers all the charts it's seen in the past. And then it says, here's the 6 I think you should look at. Go check them out. And why? Here's the pattern. Here's the time frame. Here's the entry. Here's where you put your stop. Here's where you put your limit. Here's the arrow and the target zone. And I mean, how a human cannot do that. And in the next couple of weeks, I'll make this available to you. We'll roll it out in fits and starts, but now you have that power. And when I remember about probably 15 years ago, I was in New York City for a hedge fund event. It was a private event. You had to be a licensed and registered hedge fund manager. And I was talking to a guy that spent millions on his machine, running algos that could do stuff like this. Not machine learning, not AI, but that's where he was going. And so you have that kind of power now. So put your name on the list. I'm only going to, in the first iterations, I'm only going to let people that put their name on this list sign up. Okay. QuantBox is another AI service that I own that only does fundamental analysis. And went onto the YouTube channel today and realized I haven't uploaded QuantBox videos to the YouTube for a couple of weeks, like January. So you can go to the YouTube channel and see if you like it. I think it's at QuantBox, right? Come on. It's one of those days. QuantBox, there you go. And you can check it out there and see what you need to see. So I just uploaded a bunch. Okay, a half an hour ago, I added a bunch. And then today's will be launched at noon, I think it is. Right here, this one. Check it out. But incredible information. This is the second time I've had software do fundamental analysis. So 15 years ago, I had a different Windows application that analyzed capital flows and volatility, based on news events. It tracked all the economic data. So if it said if non-farm payrolls is greater than expected, then euro dollar tends to move this far over the next 2 hours. But if it's and in this direction, based on all the NFPs it remembers, but if it comes out as expected, here's what will happen. And if it comes out less than expected, here's what happens over the 2 hours after. And I had all the charts. I could go back through every single non-farm payrolls, and it would have a record. Basically, it'd remake the chart to show you the spike and the pullback, and you could analyze all of this economic data, and it remembered every GDP release for Great Britain over the last 3 years, and it could show you, and again, the results to the news. And so, like, QuantBox it uses AI, that's new. It uses a lot of algos, of course, and that's new. And it sits on the cloud, that's new. But the use of it, the use case, I've believed in for nearly 20 years. This is just the best that technology can produce. And, dude, it's $79 a month. Again, it's kind of like, let's say Bloomberg Terminal is $2,200 a month. Now, QuantBox is no Bloomberg Terminal. They've put in billions of dollars. But for $79 a month, it's incredible. It's incredible. Yeah. So anyways, lots of amazing things going on. If you're not utilizing AI as a retail Forex trader, you are being left behind. You're going to become a third-class citizen. Yeah. Left behind. So anyways, cool. I look at it more positively. I think of that guy I met in New York that spent millions building his machine, his computer. You have something probably more powerful than that multi-million-dollar computer, and you can access it for like less than $100 a month. It's insane. All right, so let's go with commodities right now. Loving the oil, loving it like snap. I dragged this across, simple rule reversal. Just gorgeous. Gorgeous! So that's working really well. You might recall this just from yesterday, huh? The price action's been astounding, and it'll probably continue up until we hit resistance again. Let me ask you, what's your assessment? Have I been bullish or bearish on oil the last 6 months, 6 weeks, and 6 days? Have I been a bull? Have I been a bear? Now, Mr. Wright is bullish, Jean-Guy is bullish, Emmanuel is bullish, but it's been falling. It's been falling and falling and falling from 79 all the way to 71. And you're saying I was a bull? Someone was like, yeah, well, that is true. I am a bull. Okay, so the process of this is like a process of elimination. Okay, and as it's falling, you want to identify prices in which you will be interested in considering buying. But you still don't just buy blindly. So let me change this to a different color. You want to get down. So I was long here, if you recall, remember? Okay, and then 100% retracement. I just did training on this. I think it was last week. As soon as you see that 100% retracement, it shields up red alert. Okay? There's your inverse head and shoulders. Breakout, pullback, new sell. Okay? Okay? And it doesn't become bullish until what? This. So then what do? Well, I drew it for you here at Forex.Today, I'm pretty sure. If it wasn't here, it was definitely Investor Bootcamp. But there's your window of opportunity. Standard operating procedure, wait for a pullback, and then long gone. Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy. Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 up. And then probably out up here, huh? I just want to make sure you see that as reality, that that's what I've been talking about. And that it's not backward looking. I'm not trading yesterday's chart. Well, in fact, I am trading yesterday's chart because I already had it all planned out for you. You got to believe, otherwise you're just going to ignore everything I say. You're going to say, oh, yeah, well, that's all hindsight. Oh, great, great. And you start discounting. Right? If you're doing that, you need to turn that off. You're doing yourself a disservice. I've been doing this for 20 years. Okay? How's the song say? Go? Get out of your own way. Your own way. Something like that. Okay, anyways. All right, so here we are. So some of these trades I put out here weeks ago to show you. Yeah. Gold coming down. We were at 50 again, but you know our target is 2011. And we've had that target now for a month. And so we'll see if we head down there. Are you guys trying to analyze longer term charts more because of your time with me? How many people are trying to look at the bigger picture, both technically and fundamentally? Jim says, yeah. You've been using daily charts much more? Yeah. Meta, yeah. Very cool. Denise, yeah. Jean-Guy, yeah. Frank, yeah. Mr. Right. Daily mostly. Yeah. Yeah, daily. For sure. And it's funny because to an institutional investor, that's small time frames, but to a retail trader, that's ginormous. Yeah, well, you know what's happening, Jim, is you probably are trading exactly the same way you did on a 15-minute chart. You're just doing daily candles, and probably smaller time too, but you're doing it. And then inevitably, you're doing the same thing, higher time frames, and it's swing trading, right? It's still just swing trading, but it feels the same as day trading, just on a higher time frame. And instead of being in and out in 4 hours, you're in and out in 4 days. You're like, yeah. But I think, and I don't know your personal experience, but I think what happens is everybody, learns because I teach like a day trading strategy, and then I'll teach a swing trading strategy, and they put them in different compartments. So like, oh, I'm going to do a swing trading strategy. But at some point, you just implement sort of like solid trading procedures, and at the higher time frame, it's the same. They just last longer. There's no real perceived difference. But then you're like, oh, I guess I'm swing trading now. Yeah. It's like you don't have to learn 3 different methodologies. There's just a right way to trade, and then let's say an inefficient way to trade. Well, yes, less. Well, because you're letting the winners run. Yeah. Much less screen time. Yes. Yeah, for sure. So anyways, technically this is still bullish. Okay, like depends on how far back you want to go. For the year, though, it's become bearish. So that's the slope for the year. Okay. This. Okay, when analyzing it, double top. Okay. And now here's the thing. If you consider this the top of the year, 2,100 basically, it's more precise than that, of course, then you could pick out a bottom, because pivot points are a leading indicator. And let's say inflation continues to fall in the United States from, let's say above 3 to below 3. Okay. I pointed this out in the annual outlook, the 2024 annual outlook. And oops, so that's the first day. And what I meant to do is this. This was a possibility. In particular, if inflation goes away. Thank you, Mr. Wright. And so, again, I'm not making that call, but the way to read the chart is if this is a top, and, how do we define a top? Okay. Higher high, higher low, higher high, higher low, double top, big drop, lower high, lower low, lower high, lower low, lower high. Like at some point, if this is what's happening, okay? This is the target, just technical analysis. We don't know what the future is, but if you're going to use the tools, that's what the tool says. Now, the tool will also tell me, because they're just pivot points, that if there are bulls for gold, they will buy at 1938. The second price they'll buy is 2000. And they've done it once before, but they're wimping out. So here's a high, here's a high, here's a high, and here's a high. You know, you take the average high now and say, right? And you get a direction like that. And you could even parallel line the sucker. If the rate of change stays exactly the same, okay, you can go like this. Oops, now I got the wrong one. Let's get rid of that. Okay, and you can try to connect these the way you want, like that, you can say. And then you could try to time this. So let's get rid of that slope. Great, I'm deleting everything I don't want to delete. All right, so let's say the orange arrow is your strategy. It doesn't give you time, it's just direction. You believe inflation is going to no longer be a problem in the next year, throughout 2024. There'll be no reason to hedge inflation if there's no inflation. And even though the stock market might be up and maybe the housing market will be up, but other than that, the economy doesn't actually change in real terms, just people are paper wealthy. So let's just say, things cool off a bit in the stock market. Okay, so then we go out to weekly here. And what I'm trying to show you is you could start to use this channel as a timing mechanism. And you're like, okay, we would hit the M1, which is 1767, and the week before the election. Oh, that'd be too perfect. Wait, what? 10 days before the election, we would hit the projected bottom for gold. Now, is that going to happen? I don't know the future. Okay? I'm a genie in a bottle. Huh? You got to rub me the right way. Oh, Christina. Potty mouth. Anyways, boom. Okay? It's kind of interesting, right? Well, that's just analysis. That's just a model. But, it's one way of looking at it. And that's why you do linear regression and projection. So in this case, it's the projection that we're doing, but it assumes that the rate of change never changes. Well, we know that's not likely either, huh? Yeah. Now, who's bullish after all that? Who's bullish on gold? Who's bullish on gold? Let me know who's a bull. Who wants to buy gold? And don't get all mad that I just showed it going down to 17.5. I'm just showing you that's a linear projection if you're a bear kicking off an M3. Doesn't mean it's going to happen. You should be bold enough to say, no, Wayne. I think inflation is going to stick around. I think aggregate demand will pick up. I think there's a use case for gold. How many people are in that camp? You might be right. I don't know the future. Huh? Come on. Anybody? Bueller? Well, this 2000 area is the place to be. Wow, that's Beverly Hills Hillbilly, isn't it? California is the place you want to be. So they packed it all up and moved to Beverly. Look, that's your bottom, bro. Okay? Oh, yeah, well, I'm talking about for a year, Jim, right? So, yeah, it could be rangy for 2 months yet. But nonetheless, what I'm saying is if you are a bull, oh my God, this is your thing, dude. Game on, brah. Yeah, look at, we got the roll reversal, we got the moving average, we got the central pivot. It's a trifecta. All you now, so technically you have permission to engage. And the only way you'd lose money is that you were wrong on direction. You had you were wrong strategically. But you have technical permission in this $25 window between 2000 and 2025. You can engage. So you put yourself in that little window there, and it's closer to 2000, but whatever. And now you drop here, and you wait. Is it bullish now? No. 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 Okay. And you're like a ninja, a sniper. I don't know. So maybe it comes down to my target. Okay. And then what? All bears that agreed with that trade take profit. Okay. Profit taking takes the bears out. So it becomes less and less bearish. And then eventually bulls start buying, and you're off to the races. And central pivot is R2. R2. Yeah, not R2D2, R2, bro. R2 is, I might not be a smart man, but I know what R2 is. That takes us to $2,332.80. Shut the back door. $333 up. I like the way you trade. Mm-hmm. So which one is it? I don't know. Which one are you? I don't know, Wayne. Why don't you just tell me what to do? All right. Why don't you give me all your money? And I'll make the decisions for you. And you'll pay me money. But I think you should just do it yourself. Cool. So flip a coin, bro. Pick one. Wayne, just tell me what to do. Join Investor Boot Camp. Blow the whole $88 on your education. Okay? Yeah. I mean, dude, you're talking to someone that's willing to pay hundreds of thousands of dollars for his education. Yeah. So $88, it's not even a textbook. A textbook is $400. Has anybody bought a textbook recently? Any students around here buy a textbook? I don't, right? Yeah. So anyways, yeah, no excuses, I guess, is what it comes down to. There's no excuse now. I guess thinking about it with all the AI and stuff, there's no excuse to be a small, uninformed, random retail Forex trader. There's no excuse anymore to be quote unquote dumb money. You have all the same tools and training as professional traders. You can compete against a billionaire in Malaysia and win because you have more informed information. You're a more informed, prepared trader. So I think the world is really breaking down to you either can access and harness all this data or you can't. And that's it. You could either double down, triple down, and study for the SAT and get the score like everyone else at the good university you want to go to, or you can't get the score. You're unwilling, you're unable, whatever, and you don't get the score. Like if you want to look at trading and investing as a competition, then the person with the most useful information wins. And we're talking about money now. This is your career. Right? So that's how you compete. My humble opinion. I believe that to be absolutely, totally true. And for someone that doesn't have or cannot get an Ivy League degree, I mean, that's a real problem. It's a real hard thing, right? It's just that's not a quick or easy thing to do. But you can access data. You can just join QuantBox, and now you're a pro. You're like a Wall Street professional. And the prerequisite is $79. To work on Wall Street and work at a big bank or a giant hedge fund, they're going to say, where did you go? Harvard? Wharton? Where'd you go? Are you Yale? Are you a Yale guy? Well, you're like, that's very exclusive, right? It prevents you from joining the cool kids club. I don't like it, by the way, just so you know. I got pissed at the whole idea. It made me mad. That's probably the other reason I got the degrees. And degrees, right? Like one wasn't good enough. I felt like if you get one degree at 40, it looks like you're just like faking it to get into the cool kids club. I'm like, I need more than one. So, yeah. But again, that's more than $88. So all this information is now just crazy available. Crazy available. It's insane. All right, let's go into this, and holy smokes, it's just unbelievable. Let me switch over to the U.S. stocks, right? What's up, Sally? Silly Sally went to town, walking backwards, upside down. Okay. Oh, let me get out of my silly, stupid trade. Hang on. I can't do it. I'll have a profit. I don't want a small profit. Gee whiz. I'm going to move my stop. I want to take a loss on this. Let's get out. I was just being silly. All right. So thank you for that, Silly Sally. You reminded me of me being silly. So cool. I want to take a little loss. Remember that increases your returns. Why does it increase your returns? You're like, that's a weird concept, Wayne. Why would you want a little loss and not lots of winners? No, I want my average losers to be 3, and I want my average winners to be 100. So the percentage is not so. What amateur traders very often do is, they want to get profitable quickly, so their average winner is 25, but they get out slowly, so their average loser is 43, and then it's not a winning ratio. I want small losers and big winners. So every time I get a -3, it just lowers my average loss. So let's say in reality, my average loser is 50. Okay, and my average winner is 100. Let's just say that. I prefer 3-to-1, but let's go with that. But what about all the pissy ones in the middle? What about of all the break-even trades? So let's do 30, 30, 30. So the 2/3 of my trades don't make 100 pips. You get it? So now it's like 50% of my trades are negative 50, and 50% of my, 50% of my losing trades are negative 50, and 50% of my losing trades are negative 3. Okay? Now don't get into the crazy math. Let's just pretend it's 0, right? But it's recorded as a loser. So now my average is negative 25, right? If you just rounded everything around. My average loser is now negative 25, and my average winner is 100. So now, right? So now 66% of the time, I lose 25 pips on average, and 33% of the time, I make 100 pips. Are you following the math? Statistically, this is crazy good. Now, amateurs don't think this way. And what happens is they want to have 90% winners. It's so dumb. But anyways, let's go back to there. What does it do? All right, so your average loser is negative 50. But now you're flipping this around. All those break-even trades, you want to record as winners. For some reason, you consider a +3 a winning trade. Really? Do you really consider that a winner? You're like, 90% of my trades are winners. Really? +3 is a winner to you? Really? You take pride in that +3, huh? No, 90% of the time I'm a winner. No, that's not a winner, dude. Does that even buy you a coffee at Starbucks? You're like, no, Wayne, I leverage my account, so that's worth $1,000. Well, dude, that's even dumber. But anyways, so what does this do if 33% of the time you only get +3? So half of the winners now become losers. Okay? So now what? So now you're doing the same trading as me. Okay? You and I have exactly the same trades. The difference is money management. And what I do is I lose 3 pips on my, I don't call them winners. I call them like busted trade plans. I tried. I got the opportunity. It didn't work out for whatever reason. I want to record it as something that didn't work out the way I planned. So I'm going to record it as a loss. And so, but the same trader now does something different. They're more concerned about their winning percentage. So they record the busted out trades as winners. Okay? But then they're like, so 90% of the time, what are you telling them? 90% of the time, you don't make any money. Because your average winner is 50, your average loser is negative 50. And so your profits come and go. Good months, bad months, good months, bad months on average. And that's what this would mean to a professional institutional investor. And the only difference was me taking a -3 and you taking a +3. Remember, there's a competition now. We're out there raising money, and we have exactly the same track record. We made exactly the same trades. But when you do analysis of my trading, I'm a negative 25 over 100. And you're in, right? And you're in negative 50 over plus 50. Who gets the money? We made the same trades. Different money management. And it always will show you that those that come to you, and you may get this, okay? You might get this in advertising, for example, especially on these like copy trading services and all that kind of stuff. I don't even know if those exist. I think everyone's now running over to prop firms, and that other model's probably dead now. Whatever. So they'll brag. Just realize when someone brags to you of how awesome their trading is and they're making so many trades are profitable, 99% of the time, it shows that they don't know what they're talking about. Now, sometimes you really come across really talented traders, but I would still be concerned. I would still want to go through the trading history and find out, like, well, if 90% of the time you make 3 pips, but 5% of the time you lose big, once again, through risk-adjusted performance analysis, like maybe a Sharpe ratio or Shortino ratio, some sort of beta analysis, it would be very clear right away that, yeah, you almost always make money, but when you lose, you destroy all value. And that an institutional investor would simply not be interested. They wouldn't tell you that you suck as a trader because you just showed them 90% of the time you're a winner. But they'll just say that you don't fit into their current portfolio, that they appreciate, reviewing your strategy with them, but now's not the right time, or it's not quite the right fit, or you're analyzing a few more managers before you make a decision, which is just them telling you no. They're too polite to tell you that a simple risk-adjusted performance analysis would be no way, Jose. For example, on those copy services, I looked at something like 1,000 traders that were profitable. Okay, I downloaded spreadsheets of these guys from multiple services. I did this, though, 6-7 years ago. But there were 1,000 traders, and I'm not even joking. 1,000 is not an exaggeration. And these were the most profitable, most followed of these copy traders, and not one was investable. And you're like, but Wayne, what do you mean? They were all profitable. Yeah. But when you do risk-adjusted performance analysis, just like any basic due diligence that an institutional investor would do, not one of them paid you enough money to cover the risk. Because the way they traded could mean 11 months in a row they were profitable, and then on the 12th month they blew up half the account. Oh, well, it was Hamas. Just gone. And institutional investors have been around. They get it. They know that. So anyways. Sounds like, yeah, the win rate comes from normal human thinking process, for sure. But it ends up also showing sort of an education level, too, where on the surface it seems right. Someone that makes money a lot. Seems like it would work. But with a higher level of education, or let's say more ability to do statistical analysis, like you're willing to bust out an Excel spreadsheet and do some math, you can see through that. And so if you're sitting down with, let's say, a sophisticated investor, and you're doing a pitch that they should give you money, and you will trade their money doing Forex and you do the pitch of the 90% win rate type thing, it's a giant red flag that you just don't know what you're talking about. And they're like, yeah, I'm super glad you're successful with that. It's very impressive. That's a huge win rate. That's much higher than I normally see. But right now, it's not a good fit. Right now, I got my money tied up in real estate, and they send you on their way. Yeah. But the problem is there's very little education, right? There's very little education to know this stuff. You would have to get like an MBA. I think a good school with a good MBA program might give you some sort of pitching program, if you will, for your venture. If you were in a venture or hedge fund type class, but even then, it's usually more portfolio construction type stuff and not capital raising stuff. Yeah. All right, cool. So anyways, stock market's way high. Okay, I'm not in my hedge. I'm going to leave it there just so we can talk about it. Well, this is giddy up time if you're going to be a bull today. What does the chart say? The chart says here to there. And it says today, based on price action and pivot points, both daily and monthly, if it's going to go up, these are the reasonable prices to consider support. Okay. Market support, analyzing what happened yesterday. Dynamic support, using moving averages. Now that's an hourly. Maybe it comes down a little more. It could also do one of these things. I just want you to know that there's plan A in place, but plan B is this. And that is closer to 70. So let's thread that together. Yesterday. So that's your plan A. 70 is down here. So plan B is here. Okay? You got it? If you're a bull. What if you're not a bull? Don't do that. Define regular trading hours. I've never done that in my entire life. Yeah. Yeah, I've never worked a 9-to-5 day in my life. I'll give you an example. I'm a very ridiculous person. I understand that I'm the weirdo. I worked at a company called Cisco Systems, which at the time had the most millionaires working at it because it was a darling little startup in the Silicon Valley. I joined them after they moved out of the old Netscape trailers in Mountain View, and they built 3 buildings in some land out near the garbage dump of Santa Clara, not far from Great America. There was another little firm out there called 3Com, if you remember 3Com, and later on Pilot, if you remember Palm Pilot. But it was nothing but open land all the way to Milpitas. And they had just moved out of the trailers, and they built 3 buildings. Building number 3 was the executive building, and that's the one I was in. Sweet. So the idea of 9 to 5. Okay, well, I suppose it would be a 9 to 5 job. I was a database administrator overseeing 50,000 salespeople globally. Cool. Right on. Nice. Well, I didn't like the people I worked for, or worked with, I suppose. And so I'd like to get there early because I found that they just wasted time all right. On one time we literally had a meeting about having less meetings. And I'm like, I hate these people. So I would get to work early and get all my work done before these guys wasted time. Now, to be clear, my boss's boss was amazing, but my boss and them and the team or whatever. So I'd get to work early, and the earlier I got there, the least amount of cars that were in the parking lot. So I'd roll in at 6 o'clock in the morning, and you have to understand in the Silicon Valley, 9 o'clock in the morning is early. So like 6 is ridiculous. And I'd roll into the parking lot, and I had, already had my latte. It was great. And the sun is rising. Very nice. No traffic. It's really nice, right? But there were always 5 or 6 cars in the parking lot. And I'm like, I don't like that. So I'd get to work at 5:45, and there'd be one less car. And I'm like, nice, I'm winning. But there's still a few cars. So I'd get to work at 5:30, a couple less cars. But there are still some cars. So I'd get to work at 5 o'clock in the morning. And there was one car. And I was in the executive building, and so I'd go into the building, and this manager, she always got there before me. And I'm like, I can't be the second person to work every day. I can't be the second person. So 4:45, oh, she's still there before me. 4:30, oh, she's still there. I can't believe it. She comes to work at 4:30 in the morning. What is wrong with this woman? But 4:15 a.m. So I used to get up at like 3:45 in the morning, shit, shower, shave, get in the car no later than I think it was 4:10. I'd get into my car and I'd drive to work so that I would be the first person at work every single day, which is now one of the largest companies in the world, right? And yeah, so when everyone is coming in with their lattes and eating their breakfast sandwich from whatever fast food restaurant, and of course they went through traffic to get to work, so they're rolling in at 9:30. I would eat lunch and then sleep in my car for an hour and then be ready for my 10 o'clock meeting, which is the first meeting of the day for most people, and I was already done all my work. Yeah, so going back to the question, Sal, 9:30 to 4. I've never worked a day in my life like that. Yeah. Not even once. If I'm only going to work 9 to 4, I'm just going to take the whole day off. Like, yeah. So, like when it comes to trading is what you're asking me, what trading hours, I never turn my back on the market. Yeah, I never. Do you remember Brexit? Remember Brexit? I was absolutely, totally butt naked in the shower. And I was alerted to Brexit. So while showering, I was watching the markets. I'm not joking. So I'm in the shower. Brexit is announced. and I jump out of the shower. I'm dripping water everywhere. Didn't even grab a towel. I grabbed my phone. And of course, you're freaking out because you can't get the phone to work because your hands are all wet. And you're like, oh my God, oh my God. Sell, 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 sell. Yeah, stuff like that. Like, you never turn your back on the market. Another great example more recently is I prepared people to respond to the Hamas attacks. Yeah. And when the market opened, I was at Starbucks. I had my laptop, right? I had my laptop and I'm driving around. I had a busy day and then I'm like, wait, what? What? So I pull over to a Starbucks and I pop open my laptop. 3 screens, by the way. And I'm ready to go at market open. Ready to go, market open. Okay? Definitely not 9 to 5. Yeah. Definitely not 9 to 5. Yeah. Cool. And I don't consider that a burden too, by the way. I don't. I like it, in fact. It's part of the appeal to me. It's like, maybe it's like this. What's the barrier to entry when it comes to this small business of ours? You have a small business, I have a small business. We're Forex traders. We're just small businesses. I've always looked at it as a small business. And there's no major barrier to entry as far as like you going to Trader's Way, you pop in $5,000 into a trading account, you download MT4, and you can even pop on my charts. Now we're exactly the same. So what's the competitive advantage? My ridiculous, sickening work ethic will give me a strategic advantage that's not easily copied. And therefore, there's a barrier to entry. You can set up shop, but you can't necessarily compete. So it comes down to, do you have that eye of the tiger where you bring it? The platform's not a problem. The tools, like you can pop on my charts. You can pay $79 for Quant Box. I'm not sure what Traders is going to cost. But you can turn that on too, and now you have 7,000 charts being analyzed in real time for you. You have all the macroeconomics that a quant would do for you and provide you these reports. You have the charts and the platforms and the liquidity. You're the same as a multi-billion-dollar hedge fund for like less than $300 a month. But you still have to hustle. Yeah. In my humble opinion. Okay? In my humble opinion, you have to still bring the hustle. The ridiculous, sickening work ethic. But it doesn't mean you work a lot. I'm an entrepreneur, so I do my entrepreneurial things too. As Jim was saying, as you become more, let's say, mature as a trader, you find out a lot of the things you're doing on the smaller time frames that you've been practicing for years are very, very applicable on the higher time frame. But as you start to learn how to leverage what you know and do the same thing but on higher time frames, and you filter with fundamentally based biases, you may not make more money, but you probably will spend less time trading. Now, I would guess you end up making more money, but I don't want to make it a money pitch. What'll happen is you'll take the skills you have on a shorter time frame, apply it with some fundamentals and longer term technicals, And you get similar trades that just last longer, that require less babysitting, that require less stress, and you end up, the time in front of the screen changes. And that was something that I promised when it came to QuantBox. I'm like, look, you're going to make more money spending less time trading. And why is that? Your trades will be worth more. Not because you have more leverage on them, but because of your careful and thoughtful analysis. They're not worth 50 pips, they're worth 300 pips or 200 pips or 150. But your behavior doesn't change. The quality of your trades change. You see? It's just the quality of what you're doing is better. But what you do is fine. But at some point we have to improve the quality. So instead of being worth 25 pips, they're worth 100, 150. Sweet. Pretty soon you won't be doing the happy dance because you made 100 pips. And you're like, oh my God, I made 100 pips. Ow! Why'd you get up? It's 100 pips. And you're like, really? That's your happy dance? And you killed a winning trade because you hit some weird 100 pip psychological level? Psychological to whom? No one else knows you have 100 pips on that. You should get out when you hit targets. You should get out when you hit resistance. You should get out when people are going to trade against you. But nobody knows if you have 98, 99, or 100 pips. So like, wow, you got to break those habits, you see. So that's all. Yeah, the secrets to trading are not what you think. There are paradoxes. I uncovered many paradoxes when I started doing business planning and in particular performing cash flow statements for my Forex trading business. I think it's in my book, so most of you know the story. But I uncovered things like and there are paradoxes. The less I paid myself, the more money I made. Okay, the more mediocre my trades were, the more successful I was. If I was mediocre, I never needed big wins. I never needed home run trades. I never needed to take big risk. Lowering my risk and lowering my lot size made me more money. But that's a paradox. And then I noticed if I improved the quality, I ended up trading less. I traded less, but made more money. I traded smaller and made more money. I paid myself less and made more money. There's all these paradoxes. And so then when you see amateur traders that do trade 15 hours a day, have lots of trades for small profit, that use too much leverage. You know, it's the opposite. They make all the mistakes and they blow up all their trading accounts. And if you did the math, you'd find out it's because they're falling trapped to the paradox. You'd think bigger trades would make more money. Bigger winners, like big wins, like you take big risk, you go all in, and that's how you make your big money. No, it's not. Oh, for you to make more money, you got to trade more. No, it's not. Okay? And it's just math. So I spent, I think, 3 days at the Ritz-Carlton in Half Moon Bay, California, just working on this Excel spreadsheet. And it just uncovered secrets to the trading universe that, well, there were no gurus, so no guru knew, because there were no gurus. But if there were, they wouldn't have known this. I uncovered it the hard way. Critical thinking for long periods of time. That's why I went to the Ritz-Carlton. I isolated myself. I wanted no distractions, no people in my life, just me and my mind focusing on my Forex business. Really cool. Yeah, Sean, the supermodel and a beautiful brain. Yeah. Oh, and you should see my assets. They're either beautiful assets or smart assets. I'm not sure which one. Maybe both. Ooh, look at the assets on him. Oh my God. All right. Yeah. Let's go through dollars. Yeah. Did I click yens? I clicked yens. Wow, I'm tired, dude. Holy smokes. All right, so let's go with the yens. Yen. Talking about yen. All right, why is CAD going up? Let's get smart. First of all, I have a trade plan. 618 predicts a 1382, and we're almost there. But I think we can go to 111. Okay. Why do I have this pointed to 111? Why is CAD going up? Oil, not necessarily true. Yes, there's a correlation, but give me proof. By the way, everyone that has subscribed to QuantBox AI alerts, you're going to get your daily email in about 12 minutes. Your AI is writing it right now, everybody. All right, let's go back to this. Why? Give me proof. You should be able to show me a number. Oil's going up. No, not quite right. So, Mikhail, yes, but can you prove it? I understand the correlation, and you're not wrong. Okay? And TT's not wrong. It's the right thing to think of. But oil's going up in the last couple of days. But we actually knew to be prepared before oil started going up. Here's what I'm getting to. QuantBox on Friday tracked the new Commodity Futures Trading Commission report on institutional positioning. And one of the greatest capital flows of the week went into the Canadian dollar. Institutional investors were already buying the Canadian dollar. And if you were going to trade with the institutional investors, you knew to be ready, willing, and able. You would have thought this. Now, did it happen that way? Well, no, that's your thinking. And then what? Well, then you got to do your trading analysis. So you're like, okay. You see, it actually went through the 50. Okay, and then what? Higher low, higher high, higher low, higher high, higher low, higher high. Holy smokes, why that big drop? Look, we hit the daily target, bro. This green says up to here and profit taking. So maybe you tried it again. And then you tried it again. And then it did the breakout retest. Okay, and gone. The thing is, the COT gives you an insight that this is an area of opportunity, an AO. But here's the thing. Now a lot of people are going to go, oh my God, CAD yens, right? Yeah, well, we're heading to target, having analyzed today's day trade. Okay. So what I teach at QuantBox is that on Friday, right around here, we get the report. Okay. And I show it. We go through the report together every week. And I'll show money went to CAD. I can prove how many contracts long, how many contracts short, and the change in these contracts. And as a percentage of the net change, CAD yen is up. Okay, cool. So now here's what you do. as a technician, you say, okay, we expect a pullback. Fibonacci says this whole area is of interest, but you don't have to always rely on just Fibonacci, for example. You could say, okay, but that is the zone, but you're also a day trader. So on Monday, you looked at this, and did you get an up? No. On Tuesday, you got this. Did you get an up? You might have tried, and then it failed. So maybe you took a loss there. Maybe you didn't trade. But it did make a lower low, and it did test your 618. Okay. And then right now you have a new trade down here. And then you notice technically there was a big rebound and then a failure to make a new lower low. It was supposed to do this as a bear. Well, it didn't. Well, when did you get on the clue train? I know this was probably looking like hindsight, but this is how you trade. So you have to have it trapped. So now you have it trapped. Okay, and at some point you get the higher high, lower low, higher high, higher low, higher, right? Here's your breakout. This is all through the training. Higher high, higher low, higher high, higher low, higher, and right? And now it looks fantastic. Yeah, it's gone, dude. You could have had this planned last week. And now what's likely to happen is that the probability is somewhere in here, the ups are going to have some problems. The bulls are likely to book some profit and then set up the trade for next week. And next week would probably come back down to here, and maybe, see, we don't know, but maybe if it does roll over and capitulate here, somewhere around 10.5, you might decide to buy it back if it comes back. We don't know, but you know, if then. Everybody else just reacts. So CAD yen, I've been in now for a month and a half. And back on January 1st, I had planned this trade for you. On January 1st, I said the conservative target is 111. And I am now correct. It wasn't quite 111. I can't even see the number. I'd have to back out a little bit. But just shy of 111. But the thing is, we're above the M4. I got it, man. I got it. Now I showed a second wave entry. The second wave entry is here. So I'm long 108, and we're on our way to 1011. Yeah. And going back to like this discussion that we had earlier, it's the same higher high, higher low, roll reversal trade that you would have done on a 15-minute chart. Nothing fancy, nothing miraculous. I was a bull on oil. So going back to those that said oil, you're correct. And I was a bull on oil. I am a bull on oil. So that fits that narrative. I also know the seasonality of yen is usually up. So I've combined all of that. And I'm still in a trade 2 months later. Month and a half later. And I spend no time on it every day. That's how long I spend on it. That's how much work it takes. I don't have to think about it at all. It works for me. I don't work for it. Sal says lot size. This is my coaching account. Doesn't matter. It's a mini lot. I don't care. Yeah. Cool. Yeah. You should have a situation where you have lots of small trades, you let them all run, and you move your stop to break even, add another one. Move your stop to add. So I'd like you to have 100 mini lots open, but not in the same day. Maybe you make 5 trades a day, 2 of them break even, 2 of them stick, one is a loser. So every day you have one. So after 100 days, you have 100 open lots. They're all profitable. That kind of logic. Cool. So I gotta go. The markets are gonna open. I got out of my, so as far as my stock portfolio, I got out of my hedge, but I'm really happy with the purchase I made in December and then the other one I made in January in the NASDAQ. So I added to that. But my big concern now with the retirement account, with my pension fund, is it's got too much cash because I've added some cash and I'm adding some more cash. And I got out of a couple of trades and I got out of the hedge. So now the account has like way too much cash. But I can't buy the stock market way up at 5,000. I need a pullback. And so I'm sweating bullets over that because I'm losing opportunity. I could be doing asset appreciation, but the biggest thing that drives me, I don't care about NAV. My prime directive is, because I'm in so much cash, my portfolio only makes 8% in income. And I want that to be 10 or more. And if I had this cash invested, I would be earning more than 10. So I have too much cash, but how do you buy at the top? I can't. So I am sweating bullets. It is a difficult situation for me. And so, look, you could be doing this for 25 years. It's still challenging, man. It's a tough gig. Cool. I got to go, babe. That was real. Thank you for being in my life. You're good people. I like you. I have nothing but love and respect for you. If you're in my day trading group or swing trading group, I will see you at 4 p.m. for our weekly meeting to plan next week. Yeah. I'll see you soon. Have the best day ever. Cheers.